crowdcast.io/2bitidiot. And all of the folks that are on Crowdcast right now, thank you for joining. We've got 63 on the Periscope, 65. They're going to tune in for my daily updates and hopefully a group that will pop on over to crowdcast.io/2bitidiot for interactive Q&A and a discussion with Hugo Renaudin from LGO Markets. A lot of news recently. Let's kick off, though. 83 folks on Periscope. Welcome, welcome. This weekend, the big news was all about Warren Buffett. I covered this at length this morning in Masari's newsletter. Did not seem like a particularly bullish 4.5 hours for Buffett. I wrote about 5 things that stood out to me in particular, and I'm going to recap them here quickly. But for those that are not familiar, Warren Buffett's annual meeting was held virtually with Becky Quick from CNBC as the primary interviewer over the duration of what was just a marathon session. I don't know that I'll even be upright at Warren's age, but somehow he managed to cover a insanely wide variety of topics during his annual Q&A. The kind of top of mind questions and answers that really stood out to me were around the U.S. energy industry, small businesses, airlines, the Fed and its recent activity, and a more macro set of nuanced comments around betting on America and ultimately Warren Buffett's uber bullishness on the American economy. I think most of what this boils down to is a level of confidence in how quickly we're going to get over the coronavirus. We're going to get to that in part 2 of this update. And then in part 3, we're going to talk to Hugo from LGO Markets. So for starters, Warren Buffett. Quotes that stood out to me. I'll start top down. The first one and foremost, Buffett continues to contend that you can bet on America, but you have to be careful about how you bet, which is on its face, not that scary, but coming from someone that has been as optimistic and uber bullish as Warren Buffett over the years, you have to read between the lines a little bit. And it certainly sounds different given that Berkshire is currently sitting on about $137 billion of cash, about a third of its overall market cap. So this is not insignificant even for Berkshire Hathaway to be sitting on this much cash. And of course, this comes on the heels of them cashing out their $6.5 billion position in the U.S. airline market. And this is coming at the same time that Berkshire has suspended its own stock buybacks, despite the fact that about another 70% of its public stock portfolio is comprised of some of the most recession-resistant positions you could think of. Bank of America, Coca-Cola, Apple, Wells Fargo, Amex, and its other businesses and insurance are relatively resilient as well. So if you think about the mixed signals that this is sending, it certainly seems that Buffett and Berkshire are bearish in the near term and maybe medium term, even if they remain bullish in the long term. How long that's going to persist, who knows? But it generally reinforces my belief that we're not out of the woods yet. And there are structural challenges that the economy is going to face. He talks about small businesses being in trouble. This is no surprise. Everybody knows this. This is the whole reason for the Payroll Protection Act. It's the reason that we're talking about Main Street bailouts for the first time at scale in any recession in modern memory. And obviously the ones that are in trouble in the Berkshire portfolio are the same ones that are somewhat intuitive in mall operators, local newspapers, retail operators. In this case, the virus is accelerating many 10-year trends that we know are already underway in less than 6 months. The airline confirmations or the confirmation that Berkshire had indeed sold off its portfolio and an entire stake in the 4 largest airliners, I think is another eyebrow-raising move. It's not surprising. It's probably the right call. But remember, just a couple of months ago, Buffett was originally talking about the airlines as a bet on paying $8 billion to get $1 billion back in earnings. That thesis only changes if you believe that the markets are not going to come back for air travel in 2021, 2022, and that instead there is a long-term structural change in how people are thinking about travel. Clearly, that is the bearish bets that Berkshire Hathaway is making. And when you hear someone like Warren Buffett say that he wishes them the best of luck, that's a little bit scary. He says there's too many planes and the world has changed for the airlines. Just a reminder, this is a $150 billion sector usually. It employs almost 1 million Americans and is responsible for a good chunk of derivative jobs that stem from the U.S. travel industry. So about 10 million American jobs are somewhat tied to the health of the airline sector and domestic and international travel in some way, shape, or form. The other very scary comments that I saw, as Buffett said, with respect to the U.S. oil industry and their position in Occidental Petroleum. When you buy into a huge oil production company, how it works out will depend on the price of oil, not geological home runs. It's an investment that depends on the price of oil, and production will go down a lot in the coming years because it simply doesn't pay to drill. There's a lot of money that's been invested that wasn't invested at $17 WTI for crude. Whew. Remember, U.S. energy sector employs about 7 million of the 150 million in the workforce, accounts for about 350 billion in annual investment as well in CapEx. So you can see why even a hyper-capitalist like Warren Buffett went so far as to say that he was all for subsidies and even compared the U.S. energy sector to the farm industry, which has been getting government dole outs for years, decades. And to make things worse, he says, based on the indebtedness of many of these operators, it's almost certain that there's going to be some structural weakness that could affect the banking industry with respect to the energy market weakness as well. So small businesses, airlines, U.S. energy are all relatively weak and in some cases in a pretty significant amount of trouble. But there was a silver lining that Buffett congratulated, maybe would be one way to put it, Jay Powell, in beating him to the punch Jerome Powell, because unlike the last recession and financial crisis where Buffett and Berkshire Hathaway served as the lender of last resort, this time around, it was the Fed and Jerome Powell. Buffett said they acted with unprecedented speed and determination to prop up the economy. We don't know the consequences of the expansion, but we do know the consequences of doing nothing, and we owe the Fed a great thank you. I encourage everybody that wants to catch up on all of the Fed's unprecedented activity to check out Chow's excellent pro piece from late last week, where he looks at the 7 or 8 different programs that have been rolled out in rapid succession by Jerome Powell and this U.S. Federal Reserve, that many are counting as responsible for propping up the American economy during an otherwise absolutely vicious cycle that we're in. You know all that, though, because you've been reading along. The one new piece of information that I talked about today, I've been thinking a lot about accuracy versus precision in metrics. And this I think applies to our business in general at Messari. How do we think about true circulating supply and free float? Coinmetrics came out with an excellent piece last week, which we largely agree with and is consistent with our own methodology for some of these top assets. How do we think about real volumes in a world where almost all the major exchanges, or a good chunk of the major exchanges worldwide, have serious data integrity issues with how they're actually reporting on this number? How do we think about risk-free lending rates, a whole slew of kind of critical data constructs within the crypto economy? And it kind of hit me as we were thinking about the coronavirus and all the uncertainty that there is around one single metric, and that is the infection fatality rate, that we've taken a step back and started thinking about how we can be more accurate, if slightly less precise, in how we report some crypto metrics and how we just think about metrics in general. And for illustration, if you look at the range of outcomes and the range that certain experts have given for infection fatality rate for the coronavirus, it actually skews from 0.1% to 10% in terms of observed rates, which is just wildly sporadic and unworkable if you're trying to get people back to work and think about how we can actually slowly reopen the economy. But the reality is you already can look at entire populations, cruise ships, even New York City at a population basis, prisons, and you can immediately rule out the lower bounds of 0.1% because some populations have already seen a much higher percentage than that in terms of infection fatality rate, just population wide. On the other extreme, probably a bit too high to think that 5 to 10% is the overall case fatality rate for the coronavirus. So what does that leave us? I'd say our bad guess right now, probably between 0.75% or 0.5% and 2% on the very high end, based on all of the false positives and all of the asymptomatic cases and undiagnosed cases that we know are probably walking amongst us. If we can get a good handle on this metric and it's closer to 0.5% than 2%, that's going to have radically different repercussions for the global economy and for our plans to get back to work both in the US and abroad. It's the only metric that matters right now. We're keeping a close eye on it. We're trying to dig into all the new studies that are coming out because as IFR goes, so goes the global economy. And as the global markets go, so goes the price of Bitcoin. As the price of Bitcoin goes, so goes the entire crypto economy. It's that simple. It all comes down, in my opinion, to infection fatality rate. Back to crypto. We've got the halving coming up. Our research team has put together an epic halving overview, 20-page research report on the history of halvings, on our team's take on what the halving will mean for the price and market dynamics, what it means for miners, and generally speaking, how we should think about the different narratives, bull case and bear cases, leading up to this halving and beyond. I am on record saying that the halving matters for one reason and one reason only, and that is because it is a meme that helps reinforce Bitcoin's hardness as digital gold. So if you want to check out that research report, please sign up, messari.io/newsletter for more information. And that'll be part of our pro offering later this week. For those of you who are left on Periscope, we're about to get into the interactive discussion with Hugo. Hop on over to crowdcast.io/2bitidiots. Otherwise, we'll see you guys on Wednesday. We've got Catherine Coley from Binance coming on Wednesday for an update on Binance US. So not going to want to miss that. Market calendar, 11 a.m. Eastern time. A little bit early for Catherine, but she's helping out to support a broad global audience that's going to be tuning in. And that will go live at about 11:15 Eastern time after I give my daily recap this coming Wednesday. For all of you on Periscope, thanks for tuning in. Hop on over to Gradcast. Until next time, peace. All right. Those hardcore within the Crowdcast community, thank you very much for tuning in. What's the latest on the halving party, Stephen? We got to figure out the exact day and time. There's going to be a lot of halving parties going on, but we are working on it. We're going to talk about it today as a team, and we shall have more information for you and everybody else that's a Messari subscriber and fan at some point later this week. And with that, I'm going to welcome Hugo to the screen as soon as I find him. There we go. Invited. And accepted.
Hey, Ryan.
Hey, Hugo. How are you?
Good, and you?
Good, good. Thank you for joining us today. How's life? How are you enjoying the lockdown?
Yeah, doing well. I'm in New York right now.
Okay.
The center of the crisis, but it's going well. It's the beginning of the summer, and I'm lucky to have a backyard, so I can enjoy a little bit the sun. So good. Things could be worse.
Good. Well, I, as you know, and as many of our regular viewers know, we are usually in New York, but our team is pretty well spread out over the Eastern Seaboard these days. And and hopefully we'll be back and things will be somewhat functional in the coming weeks, and we'll be back in action in New York soon. For today, though, LGO's had a bit of news the last few weeks. I want to give you first the opportunity, before we go into some of the recent developments, about your background and kind of quick synopsis of LGO and what you guys do.
Yep, absolutely. So my background, I'm an engineer I'm a scientific guy by trade. So I studied math, statistics in France and here in New York at Columbia University, and started looking at crypto from a very financial standpoint. So I had some experience in the financial space. I worked in equity derivative structuring. I worked in FX in some of the largest French banks. And when I arrived in New York City, I was studying, but I wanted to learn more about the space and get more involved. So I started working for a cryptocurrency hedge fund that was before 2017. And at the time, we were like a pretty large player. I mean, we had $100 million in AUM, so that was pre-bubble, which was quite unique at the time. And we were doing arbitrage between different exchanges. And that was very, manual, because we were effectively click trading and making good spreads and good rewards, good return. Mm-hmm. So that's how I started professionally in the space, looking at the different exchanges that were available at the time. I found that there was a need to do something perhaps a little bit better for professional players, not necessarily traditional institutions, but for crypto native professional players. And that's the starting point behind LGO. So I met my business partner, Frédéric Montagnon, who's a French entrepreneur who was based at New York at the time, looking into crypto space as well. And so we started that in 2017, and it's been almost 3 years now.
Mm-hmm. There's obviously a ton of interest in building institutional infrastructure right now. What have you seen so far this year in terms of changes to kind of traditional money managers' appetite for crypto, and in particular for actual physical crypto versus entrance into some of the futures markets, for instance? So we saw Rentech and Renaissance start dabbling in the CME futures space. Has that carried over at all to hedge funds that are thinking about the spot markets and kind of physical markets, or has interest, enthusiasm taken a bit of a pause as the macro markets sort themselves out?
That's a very interesting question, and usually what I try to say in explaining who our target clients are is that we're not targeting traditional institutions, because you're right, for a traditional institution that trades commodity futures on the CME, it's much easier to get exposure to the asset class with a future. I mean, it settles the way all the other futures settle. You don't have to go through mm-hmm. the complexity of having a wallet, of managing the security of your private keys. So for traditional institutions, trading on futures and regulated futures is the way to go today. And so the spot market, when you look at it, there's obviously some ripple effect, because the more institutions trade on the future, the more people do the basis trade and arb the future and the spot. So that has some consequences on the spot market. But really, what we try to focus on as a company, and us being a spot market, is on making sure that we serve clients that have a crypto native background, that know how to deal with Bitcoin, that know how to process those settlements, that are used to physical Bitcoin, and B, clients that have a need for those for this spot liquidity. So miners that need to sell, lenders that need to borrow to lend, OTC traders that need to deliver physical coins to their clients, payment providers that use Bitcoin or stable coins as a way to do more efficient cross-border payments. So that's really what we focus on. And what we've seen, I guess, since the beginning of the year, in our kind of crypto market niche, we've seen a change of regime. Especially there was a before March 12th and then after March 12th, much less risk being taken. You can look at a very interesting metric, so to speak, or a very interesting signal to see how the market has changed, is to look at the state of the lending market. It's much more difficult today to get loans with flexible collateral. The funding rates have changed, obviously, but I think the industry as a whole, and especially professional clients, are taking much less risk. It's much more, not professional because it was professional. It's much, people are like more, it's more of a wait and see, let's say. People are trading a lot, especially with the halving, which is coming up. But we're in a different market than what we were at the beginning of the year.
You guys made news a couple of weeks ago, or last week even, about the pre-funding that you're allowing some of your institutional clients to get access to. What makes this important, and can you just explain a little bit the dynamics of assessing creditworthiness of customers and basically allowing some larger institutions to trade before they've even deposited funds?
Yep. So the first thing is that we're not reinventing the wheel. That's something that happens in the traditional markets, and the notion of pre-funding trades is something which is extremely crypto specific, and more broadly, it's specific to retail markets. You cannot do a credit risk on each of the 20 million users of Coinbase, right? So Coinbase needs to have them pre-fund. In our case, it's a little bit different because we're in business with approximately 50 professional institutional players in the space. We know them and we know their needs, right? So you're a professional investor. Oftentimes you'll have two costs. The first one is a liquidity cost or price cost. How much will it cost you to trade? And that's something that you can measure with slippage, with fees that you pay, and things like that. So that's one part of the effort that we've been doing for a year. And the second cost that you'll pay is the financing cost, right? And the financing cost has several aspects. The first one is, well, I'm a hedge fund. I've levered up, and so I'm paying financing costs on the assets that I'm borrowing. And so that's a cost. You deposit the funds on an exchange, and that has a cost. There's a cost of opportunity, which is oftentimes the biggest one, right? Because if you deposit coins on one exchange, it becomes difficult to trade on other exchanges. So what we've tried to do with this solution is make it extremely simple for a creditworthy client to come and trade on our exchange, to trade spot, with a settlement model which looks like what you have in the equities world. So you trade first, you settle later. We have risk metrics. We ask for some kind of collateral to make sure that we don't take a market risk and we don't take risk for the rest of our clients. But essentially, we make it easier, we make it scalable and flexible for our clients to trade with a very low financing cost.
In terms of just making that feasible, you're then lending from OTC desks or kind of taking out your own working capital from groups like Genesis or B2C2, the like. I think B2C2 has taken an equity position in the company. How does that process play out in practice?
So you have to think
crypto firms.
Yeah. So you have to think of it as more or less as a clearing mechanism. So you're a client. Let's imagine that we're both clients, right? And you're gonna be a net buyer of Bitcoin. I'm gonna be a net seller of Bitcoin. So if we pre-fund, the assets are there on the platform, and it's just LGO that is managing the settlement. But if we don't pre-fund, or if we post a collateral which is less than the amount that we trade, then LGO has to organize for the settlement. So LGO will come to me and ask for my dollars, and then we'll come to you and ask for your Bitcoins. And the whole risk is around making sure that all the participants that have access to this facility are going to settle. And if they don't settle, that we're covered. So that's the whole risk management there. So to do that, we ask for some collateral to our clients. We monitor metrics like intraday volatility, like slippage on different venues that we would use to kind of solve the risk problem if we have one. So it's really more than seeing it as a lending, borrowing mechanism. It's really a clearing mechanism. We put in place credit limits, clients trade, and they need to settle their balance at the end of the day.
Got it. One of the things that's interesting about LGO is that you've actually published a list of your trades. Why did you make that decision to actually post these to the Bitcoin blockchain and actually continue to be transparent about the volumes that you were facilitating?
Yeah, that was actually the starting point of the company. So one idea that we had, and there was a central idea, the central starting idea of LGO, was that what was missing for more professional players to be involved in the space was transparency. And at the time in 2017, I don't know if you remember, but there was a lot of fake data, fake volumes, fake reporting. You had Medium posts about traders that were telling how they got front run by the exchange. I mean, it was a little bit of a Wild West, and we thought that transparency was a key aspect to have in our exchange, and we wanted to kind of walk the talk and use the technology that we're involved in to make sure that we're provably transparent. It's not just us putting a list of trades, but we can prove with our technology that that everything that we do is completely transparent and can be completely auditable. And so that's the starting point of the technology that we've put together. So we call that the LGO node. So that's it's an open source piece of software which runs on so the website is lgono.de, and so you have access to all the orders, all the trades, all the data, which of all trades that happen on the platform, on the LGO platform, and it's all in the Bitcoin blockchain.
Final question that I have in terms of some of the decisions you guys have made recently. Most folks are trying to gradually penetrate the U.S. markets, and after they've kind of hit a few milestones, the next step is almost always the BIT license and interfacing with the New York regulators. You've chosen instead to focus more of your efforts in France and actively avoid the New York market and acquiring a BIT license. What led to that decision, and how recent is that? Is that something that you've been planning for a while, or did it just become too economically expensive to actually cater to customers in the state of New York and the U.S. more broadly?
So one thing that we try to focus on as a business is to make sure that we can service as best as possible the clients that we have. And we've gone through different phases, right? So quite candidly, at first we had the, like as everyone in the space in 2017, we had big dreams of going out and selling our solution to large banks, large asset managers. But the reality is a bit different. We need to focus on the clients that trade and the professional clients in the spot market. There's a lot of it's a big market. And so after a couple of months of operations, of prospecting, we realized that, actually we had clients from 20 different countries, from the US, yes, but from everywhere around the world, in Europe, in South America, in Asia, really everywhere. So, it made less sense to apply for, and that's not only New York, but any region-specific license where we, in which none of our clients were. Like, we have no clients from New York, so the case is a little bit different. And so instead, we decided to focus on being, of course, compliant with every jurisdiction that we operate in. So we're a money service business in the US. Actually, both of our subsidiaries are money service businesses here. And us being a French and American company, we felt that we had a good edge with French regulators, meaning that we could help them craft sensible laws and sensible measures to kind of regulate or control the space as a whole. So that's something that we've done, and we're applying to there's a new framework which was released by the AMF, which is the French financial authority, and we've applied to this. We've helped them craft it, and so we've decided to focus on that because it has a much more, let's say, international scope than just a BIT license.
Excellent. Well, I'd expect more entrepreneurs to think the same way. It is it's expensive and it's narrow. It's obviously important for many Western institutional investors, but it's not the whole world. And you all have certainly done a phenomenal job of expanding into multiple markets in the relatively short lifetime of the company. So appreciate the color on where things are today and where things are going. What else do you have coming up in terms of milestones or kind of key announcements that you might want to tease or keep people aware of as they consider LGO for their financial needs?
Yeah, absolutely. So I'm going to try to give you some teasers. So first, in terms of the service that we offer, so we're a spot exchange, right? And that's like that's the bulk of our business. But being a spot exchange, we're in contacts with some of the largest players in the space, and we understand more and more, and we understand more and more their needs and how they trade and what services they look like. And I guess the full stack strategy, which is to offer all kinds of services from execution to financing, going from exchange trading, OTC trading, credit line financing, term loans, that's something which is extremely appealing to us, and that's something that we'll pursue in the next few months to be able to offer more services to our current clients, and doing that, being able to get more clients. So that's the first kind of focus that we have. The second focus that we have is on so if you look at Bitcoin and cryptocurrencies, there's one use case, we'll call it use case, which is speculation or trading as a whole, right? You benefit from the price, and people want to benefit from that price, so you service them. So that's like the trading use case. And there's a use case that we've been more and more active in, which is the core of what Bitcoin is as a currency. So cross-border payment in an instant and unintermediated fashion. Lately we've been very active with stablecoins in different currencies. So help clients and potential clients to do faster transfers or to move money faster with the help of stablecoins. And there's an interesting project from the French central bank that is releasing that they're calling for. They're doing an RFP for stablecoins. So that's something which is interesting. And the second thing is using Bitcoin as a way to transfer money from different countries. So we realized that with our current clients, we had clients that were using Bitcoin or Tether or stablecoins like this to move money from Asia to the US or from Latin America to the US. And that's a fascinating use case. And that's the number one use case of crypto, cross-border payment. And so we'll look at expanding a little bit more our services to these kinds of specifically these kinds of clients, those businesses that need to move money around the world in a compliant fashion, but with the efficiencies of a crypto.
Excellent. Well, wish you the best of luck as things continue to progress throughout the remainder of the year, and appreciate you coming on for this quick update today. Where can people find you online, Hugo?
On our website, lgo.group, or on our Twitter account, which is LGO Group.
Excellent. Hugo Renaudin, thank you again. And unless there's any questions from the peanut gallery, we will let you go. I don't see any so far. But maybe next time after they've had a chance to digest all the good info that you just sent.
All right. Thank you very much, Ryan.
Thank you. Have a good one. All right. We'll keep it short and sweet today. I did a lot of writing this morning, so head on over to that newsletter, check it out, let us know what you think. And until Wednesday, when we've got a very special episode with Catherine Coley from Binance US, we will get back to work, let you do the same, and hope you're staying safe and sane and healthy amidst all of this chaos. Until Wednesday, peace.